All right, so that's that as far as festive demand, brands, how they're gearing up for added demand perhaps, and that's what a lot of sectors would like to see. Meanwhile, you need money to be able to spend during the festive season. Demand is there, but of course, pockets need to allow that demand to flow through and turn into sales. What's the situation with that? Now, the wage code will have a lot to do with how we end up spending. The Labour Ministry has met with industry representatives today, and they're discussing the implementation of those 4 labour codes. Industry bodies have agreed in principle on the implementation of the wage code, and they're talking about 50% allowances clause that they've also asked the government now to clear up with those guidelines when it comes to exemptions too. Those were the 2 odd bits, and we've addressed this. We were the first to tell you here at ET Now on the 18th of August, and now it's confirmed that negotiations are currently on between the industry bodies and government to come to a consensus on how to go ahead with the wage code. Let's find out more from my colleague Prakash Priyadarshi. He's here to tell us what was discussed in an important meeting, important for all employees out there in India. Prakash, what have you heard?
See, Labour Ministry's meeting with industry has just ended, and we have been informed that the industry has given a presentation on their preparation for implementation of 4 new labour codes going forward. Industry is now agree for implementation of wage code with 50% allowances clause. As you are aware that the new wage code mandates that allowances should be capped at 50% of the total salary of the employee. And initially industry had shown apprehension because it is going to increase a financial burden. But now they have given a green signal with some condition. Industry has asked government to come out with clear guidelines as far as exemption list are concerned. Industry has said government that exemption list should be predefined and it should not be open-ended. It has also urged government for grandfathering provision for gratuity calculation. Apart from that, industry has also asked government to give 2 months time to implement these laws once notification issued. Apart from that, some other issue has also been discussed in this meeting, and one important was with regard to enhancement of women workforce in total workforce by 2047. Government wants to increase women workforce by 50% of total workforce in next 25 years. So a strategy related to this ambition and target has also been prepared in this meeting. And it was a very crucial meeting because Labour Ministry is going to hold a consultation with the state governments on 25th and 26th August on implementation of these 4 new labour codes.
Prakash, thanks very much. We'll be on standby for the new wage code. And obviously, it's going to have repercussions and ramifications for the entire workforce in the country. But there is one sector where the workforce is slightly more worried than others. That involves the IT industry. Now, tech giants like Wipro and TCS, they've decided to hold the variable pay, at least for some of its employees, not all of them. Variable cuts could There is the fear that these variable cuts could spike attrition in the near term. And that has been a persistent worry for the IT sector. My colleague Anisha is joining us again, and she's going to break this down for us. What we are seeing in holding back of variable pay by the IT sector, by industry, could actually lead to further attrition in times to come. What could be the possible impact? Anisha is here to tell us. Take it over.
Well, yes, the spotlight is back on the IT sector, and today we are tracking a bit of a negative news flow coming in for the entire IT sector, and that is because the read-through of the latest event is a tad bit subdued. Now, what has really happened is a couple of companies like Wipro, etc. have delayed the payments, and that is the variable payments to some of the select employees. In fact, for manager and above levels, there will be no variable payout for the June quarter, and as well as the freshers and lower levels, they will get almost 70% of their variable pay, and not really the 100% that we were seeing seeing recently. In fact, we were seeing the trend going higher than 100% the variable payout as well. That is likely to end now, and the reason that the companies have given is that the margin has been under pressure. That is on account of inefficiency in talent supply. There has been pressure on margins due to the inefficiency in investment in technology as well, and that is why they have said that for now at least they are delaying their variable payout. And Wipro is not really alone. TCS has also done it. They have delayed it just by a month, so maybe we will not see a big impact come in for TCS, but for Wipro there will be a positive impact in terms of the margin flow, because of course over the last 4 to 5 quarters we have seen that supply side pressures have really dampened the margins by a huge lot. In fact, for Wipro the margins have come down from 18% level all the way down to 15%, and attrition is something that has been plaguing the entire industry. The expectation was that attrition has already peaked out, or at least it will peak out in Q2, but given the fact that there is some negative news flow when it comes to the headcount trends, we are expecting that attrition peak out might get delayed to Q3. But the underlying thing that really needs to be watched out for is the fact that the talent war that we were seeing between companies seemed to be ebbing. This tells you that the job switching that we were seeing, or the fact that the employees were getting huge raises of around 30 to 50% when they used to switch, is ebbing down, and that is why the companies now have the leverage to actually hold back on the payments that they were doing to the employees, and that will support the margins in the near term. Though attrition might be a bit higher in the immediate quarter, that is Q2 and Q3, it might remain high, but margin is something that is likely to improve. But the underlying thing to watch out for would be the demand trends, and this is something that the analysts are worried about, that perhaps this is the precursor to the fact that demand is slowing in the coming quarters, and that is something to watch out for.
Yes, demand pressures exist. Margin pressures continue to haunt IT companies, not just in India, but the world over. And especially what we are seeing on the NASDAQ right now is perhaps a fallout of that. That pressure has been consistent. So now the big question is, are workers going to start to walk as much as they did? Like Anisha was telling us, we are expecting, at least until now, we thought attrition is going to peak out in the second quarter, but now it may be pushed back. Let's get perspective on this. Rituparna Chakraborty is co-founder and executive vice president at TeamLease. Good to have you back on the show, Rituparna. Now, we are hearing about these pressures. In fact, I started off the show talking about Wall Street. There are consistent pressures in the IT pack that you see getting reflected in the stock market as well. Margin pressures are for all to see. Now we're talking about Wipro and TCS holding back variable pay. Do you think that's going to lead to further attrition, or is the pressure when it comes to margins is consistent across the board? It's pretty secular. So then by switching from one company to another, what would an employee get? What's your reading?
Thanks. Good to be back on the show. I actually feel that TCS, Wipro, and the likes, the stature that they carry, I think while it's kind of unfortunate, and I know it's disappointing that when variable pays are put on hold for employees, we must remind ourselves that variable pay is always linked to the company's performance and, of course, the contribution of individuals towards that performance. So it often happens, maybe not so much in the technology world, which usually have amazing results, that 100% of the variable pay do not get paid out. But having said that, I guess my perspective on this is that it's disappointing. However, the good thing is that they are not being withheld permanently. It's been delayed. And I think that itself is promising. And also, it probably may be premature for employees to kind of start looking elsewhere, because, I mean, these are very well-known brands, responsible brands and employers, and kind of walk the talk when it comes to employee benefits and commitments. And hence, if this is the kind of an adjustment to kind of deal with the current realities, while it's disappointing, but I guess one should just wait it out. So I personally feel that employees, while there is always a fear of attrition, but like you rightly said, it's not that there are other people out there who've got a very different scenario from what's happening with the likes of
In fact, Rituparna, big tech firms like Google and Apple are planning layoffs. Google is wanting employees to work harder. Apple has already laid off 100 employees. Some of the other big tech firms, Netflix, Microsoft, so many more have already fired hundreds of employees. We are seeing an economic downtime, and that's perhaps the reality. But when we talk about a Wipro, they're also talking about inefficiency in talent supply. How real is that picture? And how much is that really one of the reasons why we are seeing a holdback when it comes to variable pay?
I think it's the point they're trying to probably drive at is productivity, and all the examples that you cited. I think most of these organizations are essentially, all of them are seemingly worried about the productivity levels. I saw a similar announcement from Mark Zuckerberg also about Facebook. So essentially, it's like there is in general a push to kind of improve employee productivity. And I think that's the kind of inefficiency that Wipro is possibly alluding to. So yes, we did have a phase during the pandemic when there was a plethora of demand getting created as against the skills. So again, I mean, it's something very typical of the IT industry that whenever there is this huge demand creation, then there is a lot of money available by way of compensation. And then there is also a significant pullback when things get a little more stable or a little more difficult. So yes, productivity is important and paramount all across, whether it's in the startup ecosystem or for established organizations today. And I wouldn't be surprised if this focus on productivity continues and becomes more broad-based. But having said that, I don't think it's all doom. I think technology will still lead the way in terms of hiring momentum, but if side by side, I think it's the right thing for organization to remain focused on productivity improvement, because once you let go of that, I think it's something which kind of ends up haunting these organizations in terms of their bottom line, which is not wise in today's time. So yes, I think the focus on productivity is going to be clearly the narrative.
And if the focus is going to be on productivity, what really is the shift that you see pre-pandemic and now? There has been a change in approach, both at the company level and at the employee level. Now, how is that really playing out at the moment? Perhaps this could be a fallout, at least partially. Would you agree?
Oh, absolutely. I think this will compel organizations to look at different kinds of innovations when it comes to talent mobilization. Like you cannot, I mean, a lot of the technology industry has been surviving through lateral hires. Lateral hires are always very expensive as against the productivity gains. And I think I wouldn't be surprised if the technology industry start investing in terms of long-term pipeline building strategies, which gives them the desired skill sets as well as the productivity. You'll see a lot more adoption of academia-linked apprenticeship program, degree apprenticeship program, which essentially is how you can make yourself resilient, get the job done. It also creates ample opportunities for today's youth. And essentially, the skill dissemination in technology will become more widespread. I feel skill or the skill knowledge, it's still an elite, is amongst the elite in today's youth. So I think there has to be a process by which technology skill sets can become much more democratized. And I think apprenticeship or investment in apprenticeship is probably a way forward. So you will see adoption a lot of layers in terms of talent mobilizations. It's not just going to be the one kind. So yeah, I pretty much think that's how the IT industry will kind of pave the way forward when it comes to talent pipeline building and mobilization.
In fact, my producers are just telling me that Infosys has also reduced the average variable pay to 70% for their June quarter, and they're talking about a margin squeeze. So if it is a lot to do with a margin squeeze, Rituparna, do you see this lasting? And if it is going to last, then what are the shifts that you see? You spoke about some of them, and in the past too, we've spoken about, contractual labor. The gig economy is going to grow. Do you see that happening in the IT industry as well? Because when there is change, there is a major shift in patterns in terms of how companies approach employment and how employees want to be employed.
So I think, one should not look at it as an attempt to just reduce cost. I think it's an attempt to kind of get value for money, improve productivity, invest more in just in case and just in case time talent. And hence, our organizations and enterprises geared towards having those kind of layered employee mobilization and staffing solutions. So you will have certain jobs for which there will be core employees. You will have an emerging concentric circle of, contractual employees. There will be another of gig workers. There would be apprentices. So you will see a lot of layers emerging, and that's how you remain competitive globally as well. That's how you will remain lean, productive, alert. Because in technology, the thing is that the skill sets are changing very quickly. So nothing is permanent when it comes to the kind of skill maps that you work around within the organization. So one has to develop and invest in talent, mobilization strategy where you can constantly adapt, and constantly move from one to the other. So I do think that IT would be one industry where you will see a lot of concentric circles when it comes to talent mobilization. And that's the way forward. It's not just about saving costs. It's essentially getting a higher return on the investment that you're making on talent. That's essentially how the future would look and how you can stay relevant and ahead of your competition.
Rituparna, thanks very much. That's very insightful. It's great always chatting with you, and you've given us further perspective on what we are seeing in the IT industry right now. And perhaps that's the story that could actually work for many other sectors, even at the moment, because this is a time of shift, of change. There is a lot of volatility, and that's not going away in a jiffy. So we have to rethink how we approach a lot of factors, and employment is definitely one of them.